Hello friends, today we are going to learn about material variances. So before jumping into the problems, first let us see what are the different material variances and what are the formulas to compute them. Let's get started. So first we have the material cost variance, right? So the formula to compute material cost variance is basically simple. Standard cost minus actual cost. How do we get the standard cost? So standard cost is standard quantity multiplied by standard price minus what is the actual cost? Actual quantity into actual price. Very simple. Next, let us look at the breakup of this. That is, material cost variances has got two components. One is the usage variance and the other one is the price variance. Now, what is the formula to calculate usage variance? Usage variance is standard quantity multiplied by standard price minus standard price into actual quantity. Sorry, this is price. And the formula to calculate price variance is standard price into actual quantity minus actual quantity into actual price. Going further, usage is again divided into two parts: material yield variance and material mix variance. So formula to calculate yield variance is standard quantity times standard price minus revised standard quantity RSQ. So this is revised standard quantity. Please remember that revised standard quantity times what? Standard price. Mix variance, again we have revised standard quantity, which is the same thing again, multiplied by standard price minus standard price into actual quantity. Now let us analyze a little on these formulas so that you can easily remember them in the examination. Now there are multiple ways to write these formulas. Say for example, one way to write usage formula could be standard quantity minus actual quantity multiplied by standard price. Now if you look at the institute materials, they usually refer to this formula. They use this formula. But the formula which I have written is also correct. Mathematically, yield us the same result every time. Why do I insist on using this formula, which has got four terms, instead of using the institute formula, which is on only three terms? Is because it is easier to remember this formula. So, if you remember the formula for material cost variance, which is standard quantity multiplied by standard price minus actual quantity into actual price. If you remember this, it will be easier for you to understand or sorry, to derive the next step, next level of formulas. How is you take the first part of material cost variance formula, that is standard quantity into standard price, and write it as the first part of usage, which goes here, right? And then you take the second part of the material cost variance and write it in the material price variance. It's the same thing. Then now you have got the one part of formula for usage and price. What about the remaining part? Remaining part is also very simple. It's already there on the board. No, not in usage. In material cost variance, how? You take these two terms, standard price and actual quantity, multiply it with each other and write it here. See, understood? It's very simple. If you remember the formula for standard cost and actual cost, you can derive the next level formula, that is what the formula for usage and price. If you remember these, it is only a matter of filling the blanks. Now moving on to the third level. So this is our first level, this is our second level. You only have to remember this. You remember this, you derive second. Let me write remember, you derive this. Now this becomes my third level. How do I derive the third level? Third level, again, I it is very simple. What we do is we take the first part of usage formula, that is the standard cost, and put it under yield as the first part, and take the second part of usage and put it as mix. Then then what we are left out, then you, if you multiply with this, it is wrong. This becomes wrong. Don't do that the way we did. Here there is slight change. What is the slight change? We introduce a new term called revised standard quantity. As I told, revised standard quantity. If you introduce this, here it is the same, right? These two are same, so you have to remember this. So the first formula you have to remember, the first level, it becomes remember, second is derived, third would be derive and remember, right? It is only one term which you have to remember, revised standard quantity. Now what is revised standard quantity? We will look at it when we solve a problem. I hope you understood this. If you are still confused on how I have derived these formulas, uh, I will explain it one more time very quickly. So what we do is we have the formula for our material cost variances, that is standard quantity into standard price minus actual quantity into actual price. Then we divide this formula into two. One part goes to usage, which is the first part, our standard cost, standard quantity into standard price goes here. Then we take the second part and put it under price, actual quantity into actual price. Now then we multiply the middle two terms, that is the standard price and actual quantity, and put it as the remaining back part of usage and price. Our formula for usage and price are ready. Now moving on to yield and mix, we break up the usage formula into two parts again. So standard quantity and standard price, which is the first part of the usage formula, becomes first part of my yield, and the second part of usage formula, that is standard price into actual quantity, becomes second part of my mix formula. Then what we do is we take the standard price and multiply it with a remember, a new or previously unused figures called as revised standard quantity in both the cases, yield and mix. Now uh, if you get confused while you're solving a problem and you're not sure whether what you're doing is right or wrong, then there is another check which uh, you you can use. So what is the check is basically, so material cost variance should always be equal to material price variance plus material usage variance, and Material usage variance will always be equal to material yield variance plus material mix variance. So remember these, and this we will also use while we are doing our problems. Now, I hope you understood this. Now let us look at few problems. So here we have a problem from our institute material. Let's read the problem first. NXE manufacturing concern furnishes the following information. Standard material for 70 kg finished products 100, price of material rupees 1 per kg. Actual output 210,000 kg, material used 280,000 kg, cost of material 252,000 kgs. Calculate material usage variance, material price variance, material cost variance. Okay. Now, to solve any problem of standard costing, first what we have to do is, the first step we have to do is, after reading the question, is write down the information which is available in the question. Where do we write it? Now, I'll give you a specific table using which you will be able to plot what all the information is available and what all information is required. Right? Always follow this table, be it for material, labor, or overhead variances, does not matter. We can calculate all the variances using this table with few adjustments wherever necessary. So since we are calculating material variances, the table is going to be standard quantity, then we will have standard price, then we will have standard cost, and we have actual quantity, actual price, and actual cost. So do we have the standard quantity? Do we have? No. Why don't we have it? The question clearly states that the standard material for 70 kg finished products is 100. So what does it mean is, if I input 100 kilograms of my raw material, I get 70 kilograms of my finished product. But it never says that for my output, actual output of 210,000 kg, what is my standard input? We will have to calculate that. So since we have to calculate, we'll come back to that. We'll come back to that. Next, price of material, standard price. Have they given it? Yes, which is rupees 1 per kg. So I'll write it as 1. Then standard cost, we do not have the information available in the question. Neither can we calculate unless we get the standard quantity. So we will skip this for now. Next, actual quantity. Have they given the actual quantity? Yes. In actual material used will become your actual quantity. This material used, not output, not output. Output is not my actual quantity. My actual quantity will be 280,000. Why 280,000 is because I introduced raw material of 280,000 kg, and then 210,000 210,000 kilograms of finished goods were manufactured. So what is my actual quantity? It is 280,000. So let's write that down, 280,000. Now, do we have the actual price? What the question says is, cost of materials is 252,000. Is that the actual price? No, it is not, because that is the total cost of my actual output. Oh, sorry, the actual materials used. So we will take that as actual cost, and then we will compute what is actual price. So what is my actual cost? 252,000. Now, to compute my actual price, we would need a calculator. Well, I do remember it. It is 0.9. However, yes. Now, coming to standard quantity. Now, how do we compute standard quantity? So it is very simple. The question states that for 70 kg output, for 70 kg output, I need 100 kgs of input. For 70 kgs of output, I need 100 kgs of input. So for 200 10,000 kg of output, how much input do I need? Simple cross multiplication, basic math, we get the answer to be 300,000. So this becomes my standard quantity. 300,000. Standard cost again would be 300,000. It is not equal to standard quantity here. You have to multiply this, you get to get this. Now our table is ready. Once our table is ready, we just have to use the formula to compute all the variances. So the first thing asked in the question is material usage variance. So what is the formula for material usage variance? It is standard quantity multiplied by standard price minus standard price into actual quantity. What is my standard quantity? 300,000 multiplied by 1 is 300,000. So this is 300,000 minus standard price into actual quantity. What is my standard price? 1 into actual quantity 280,000. So what will be the answer? 20,000 favorable. Now, why do I write it as F? Because it is favorable. What does favorable mean? Favorable means we are in positive. It is a profit to us. Be- So we have used lesser material than our standard. So we had estimated or we had planned to use 300,000 kg to manufacture 210,000 kgs of output. However, we have only used 280,000 kgs of material to manufacture 210,000. So 20,000 rupees, 20,000 rupees worth of materials we have saved. But don't write rupees, you only have to write 20,000 favorable. Next, second, what the question asks is material price variance. Material price variance. What is the formula for material price variance? Standard price into actual quantity minus actual quantity into actual price. Hmm. So what is the standard price? 1 into actual quantity 280,000 minus what is my actual quantity? 280,000 multiplied by actual price 0.9. We already have the figures. 280,000 minus 252,000. 280,000 minus 252,000, which will be 28,000 favorable. Why favorable? Because the answer is in positive. If the answer was in negative, we would have denoted it as A, adverse. Don't do that. It is positive, so we will write favorable. Now, coming to our next, it asks us to calculate material cost variance. So let's look at that. Material cost variance. So what is the formula for material cost variance? Standard quantity multiplied by standard price minus actual quantity into actual price. So we already have this. Where do we have this? Here. What is my standard quantity into standard price? We have 300,000 minus actual cost is 252,000, which is coming to 48,000 favorable. Now, here ends the solution to this problem, but you should also go one step further and do a check. What is this check? This check is basically the same thing which I had told you, wherein material cost variance is equal to material usage variance plus material price variance. Have we done or have we calculated the variances correctly or not? So, what is material usage variance? 20,000 favorable plus material price variance 28,000 favorable In total, we get 48,000 favorable, which is equal to the variance which we had calculated earlier here, 48,000 favorable. So if these two are matching, then we have done the solution correctly, and then now we can move on to the next problem. I'll leave it like this. For if you want to copy for a second, you can pause and copy, then we will move on. Yeah. Now, now let us look at a second problem. The earlier one which we worked out was very simple. This is little complicated than that one, but it will help us to understand the material variances completely. Let's read the problem first. ABC Limited produces an article by lending two basic raw materials. It operates a standard costing system, and the following standards have been set for raw materials. Material A, standard mix 40%, standard price 4. Material B, standard mix 60%, material price 3. The standard loss in processing is 15%. During April 2021, the company produced 1700 kgs of finished output. The position of stock and purchases for the month of April 2021 are as under. Material A, stock on 1/4/2021 35 kgs, stock on 30/4/2021 5 kgs, purchased during April 2021 800 at a price of 3,400. Material B, stock on 1/4/2021 40, stock on 30/4/2021 50, purchased during April 2021 1,200 at a cost of 3,000. Opening stock of material is valued at standard price. Calculate the following variances: material price variance, material usage variance, material yield variance, material mix variance, total material cost variance. Now let us see how to solve this problem. So first we will write down all the information which is available to us from the question. We will go back to our table, which is standard quantity. Then in this we will have an additional column called revised standard quantity. We will see how to compute this a little later. Then we have standard price, then we have standard cost. Then we need our actual quantity, actual price, and actual cost. Since we have two material, let us write down A and B. Now, do we have the standard quantity of A? Let's look at the problem. Do we have it on the face of it? No. So we will have to compute it. Let's come back to this later. First, let us write down whatever is available on the face. Do we have the standard price? Yes. A is 4 and B is 3. Now, do we have the standard cost? No. So we will have to compute it. We will come back and compute this later. Do we have the actual quantity used? Yes, we do have. However, if you look at the problem, there are two different prices at which the uh, quantity has been used. One is the opening stock, which is valued at the cost, standard cost. So, what is the opening stock? 35. And what is the standard cost? Standard price, sorry, 4. So for this our total cost is 140. Then the remaining part. So in the problem they say that we have purchased during the month of April 800 kgs of material A, and there is a closing stock of 5. So out of 800, since we have a closing stock of 5, we have only used the balance 785. Sorry, we have only used 700 and sorry we have only used 795 of the material, 795 kg of the material, 795. Now in this, what will be the actual price? So if you look at the problem, they say 800 kgs I have bought at 3,400. 800 I have bought 3,400. So my cost per kg would be how much? My cost per kg would be 4.25. 4.25. So this is 4.25 into 795, we get 33.78, sorry, 3,378.75. That becomes my actual cost. Now, coming to B. Again, for B, they say that For B, they say that 40 was the opening stock, which is valued at our standard cost. So I will write down 40 at 3. This is 120. And then balance 1200 I have purchased during the month. 50 is my closing stock. So the balance of 1150 is only used. Now, we are coming to actual price. I have paid total thousand three sorry I have paid total 3000 for 1200. So for per kg, how much do I get? I get 2.50. So if 2.50 is per kg and I have used 1150 kg, what is my actual cost? 2875. 2875. Now, since we have done this, now let us come back to our standard. Now, standard quantity. How do we compute the standard quantity? Now, if you look at the problem, what does the problem say? The problem says here, if you see, the standard loss in processing is 15%. The company produced 1700 kgs of finished output. So what does it mean is, for 1700 kgs, what is the standard input I should have used? How do we compute that? To compute that, let us prepare a small working note. So what will we write is 1700 is my output. 1700 is my output plus loss. Loss of 15%. What is my loss of 15%? It is not 1700. It is not 1700 into 15%. This is wrong. This is wrong. It is not 15% of 1700. It is 15% of my input. 1700 is my output. I put in input. I have my raw material as input. Then 15% of that raw material is loss. Then whatever is left out is output. So how do we calculate? The formula is going to be, the correct formula to calculate this is going to be 1700 into 15 divided by 100 minus 15. Why 100 minus 15? Because 100 is our total percentage, minus what is the loss? 15. So we are left with 85 there. So the answer to this is going to be 2000 kgs. So, sorry, it is not going to be 2000 kgs. This, since it is loss, this is going to be uh, 300 kgs. This is going to be 300 kgs. So our loss comes to 300. Total input. Total input becomes 2000 kgs. Now this 2000 kgs includes both material A and B. We have to now bifurcate between what is material A, what is material B. How will we do that? So material A is 40%, material B is 60%. So 2000 into 40% equals 800, and 2000 into 60% equals 1200. So now, since we have got the stand, now this becomes our standard quantity. Remember, this is standard quantity, right? So we will go back right here, standard quantity 800, this 1200. 800 into 4 is what? 3200. 3200. 1200 into 3 is 3600. Huh. Now, coming to revised standard quantity. Now, what is revised standard quantity? Revised standard quantity is basically I have used a total output of 2020, right? Sorry, the total input of 2020. My standard input should have been 2000, right? Now, what we calculate in revised standard quantity is, if I had estimate, if I wanted to use 2020, if my out standard quantity it was equal to 2020, what would have been the ratio of standard quantity, that is ratio of A and B, right? So how do we do that is, for A we will calculate, let's not do it here, let's do it here. So for A we have standard quantity which is equal to 800, right? Then which should be divided by total standard quantity which is 2000, and multiplied by our total actual quantity which is 2020, which comes to 808. And for B similarly we have 1200 divided by 2000 into 2020, which is 1212. So this becomes my revised standard quantity, 808 1212, and total of this is 2020, right? So one more time let me explain. Now we had planned our standard quantity to be 2000, we had planned our standard quantity to be 2000, but our actual quantity came out to be 2020, right? Our actual quantity came out to be 2020. Now what we compute under revised standard quantity is, if my standard quantity was 2020, that is, if let's my total standard quantity was equal to total actual quantity, then what should have been the ratio of, sorry, what should have been the ratio of standard quantity of A and B, right? You can copy this for your easy remembering, right? Now, uh, since we have got all the information required in our table, now let us compute the variances. What is the first variance they want us to compute? Material price variance. It is suggested to go as per the requirements in the question. However, there is no hard and fast rule that you have to follow the same uh, pattern, the same sub questions. You can compute however you want, but it is suggested to go one after the other as in the sequence they have requested. So now, first is the material price variance. Material price variance, again, let us write the formula. What is the formula? Standard price into actual quantity minus actual quantity into actual price. Now, what let's do for A first. This we have to do it for uh, both the materials separately, right? If you do it consolidatedly, that would be wrong. You can do it consolidatedly, but you have to again give the figures for both the materials separately. So what is for A? What is the standard price? Standard price is 4 multiplied by actual quantity. So which actual quantity? We have two actual quantities here, 35 and 795. So which should I take? Which will I take? So what we will see is the standard price for uh, this 35 quantity, which is the opening stock. Standard price for this is 4. Standard price will be 4, and the actual price is also 4. Since there is no difference between standard price and actual price, we need not compute the variance there, because there is not going to be any price variance. There is not going to be any price variance, remember, not the quantity variance, not the usage variance, price variance. There is not going to be any variance due to price, because the price, the standard price and the actual price are same. Now, so we only have to calculate for 795, which is the balance, where we have a different actual price than our standard price. So what is our standard price? 4 multiplied by 795 minus 795 into actual price of 4.25. What do we get? 4 minus 5. We have 198.75 adverse. What is A? A means adverse. How do we know it is adverse? Because the result of this is negative. If it is negative, that means it is an adverse. That means we are uh, in loss, right? There is a negative variance due to price. So we denote it as adverse. Now let us look at B. Similarly, as in A, in B also the opening stock, since it is valued at the standard price, there is no difference in price between standard price and the actual price. Hence, there is not going to be any variance. So we will only compute it for the actual quantity of 1150. So our standard price is 3 times 1150 minus 1150 multiplied by 2.50. How much will this be? Zero point 0.5 into 1150, which is 575. 575 what? Favorable. Why favorable? Because the ultimate result is positive. So here we are in profit. Now material price variance is going to be 198.75 adverse plus 575 favorable, right? So what is the total material price variance? 198.75 minus 575 is 376. 376.25 favorable. Why favorable? Because it is because we get a positive number. So how do we know? How do we make sure that what we are computing is correct? So, while you're calculating it, what you have to assume is the A, wherever it is A, take it as negative figure. Wherever it is A, consider it to be negative figure. This would be negative figure, right? So consider this minus and this plus. So what will happen if we consider this minus, we get a positive result, and that which means it is a favorable. Just don't write the signs in your examination. That is not the right way of presenting this. That would render your problem incorrect. Do not write these symbols. Whichever I have written in green, do not write those. Only write is whether is it adverse or favorable, and remember, adverse means negative, favorable means positive. Now moving on. Now let us compute the second requirement, which is material usage variance. So material usage variance. What is the formula for material usage variance? Standard quantity times standard price minus standard price into actual quantity. Let's do it for A. Now, standard quantity. What is the standard quantity? Standard quantity, we will take this one. We will take this. Not revised standard quantity, we have to take standard quantity, right? So, what is the amount? Sorry, number 800. We take 800. Our standard price is 4 minus standard price is again 4 multiplied by actual quantity. Now, how much is the actual quantity we have to take here? The actual quantity will be total of these two, that is 35 and 795. It is going to be total. In while calculating uh, price variance, we had only considered this line item. Why? Because there was no difference in price of the opening stock. But now we are not looking at the price, we are only looking at the quantity. So what is the total quantity of material A used? It is 35 plus 795, which is equal to 830. So what will be the variance here? 30 times 4 is 120. What is it? Adverse. 120 adverse. Now coming to B, our standard quantity is 1200, standard rate is 3, minus what is our standard price? Again 3 multiplied by what is our actual quantity? Again here we have to add these two. We will have 1190. What will be our variance? Our variance is going to be 30 favorable. 30 favorable. So total material usage variance is going to be 120 adverse plus 30 favorable, which would come to 90 adverse, right? How do we know it is adverse? Because the result is in negative. Now, next we have to compute material yield variance. Yeah. How do we compute material yield variance? Material yield variance. What is the formula? The formula is going to be simple. Standard quantity multiplied by standard price minus revised standard quantity into standard price. So here again we do it for A and for B. We do it for both A and B. So let us compute for A first. What is our standard quantity? 800. What is our standard price? 4. What is our revised standard quantity? We have already computed that in our first step. It is available in the table. Revised standard quantity is 800. Sorry, 808 multiplied by our standard price of 4. So the variance what we get for this is 8 times 4, which is 32 adverse. How do we know it is adverse? Because it is in negative. B, again 1200 times 3 minus 1212 times 3. How do is it 1212? Look back at our table. It says 1212 revised standard quantity. So what is the variance we get here? We should have used 1200. We have used sorry, our standard quantity uh, What should be the variance here? 1200 times 3 minus 1012 minus times 3. 12 times 3 is 36 adverse. So what is my material yield variance in total? 32 adverse plus 36 adverse, which is equal to, always write brackets, do not forget the brackets. 32 adverse plus 36 adverse is equal to 32 adverse plus 36 adverse is equal to 68 adverse. Now let us calculate the material mix variance. Material mix variance, which is equal to, what is the formula? Revised standard quantity multiplied by standard price minus standard price into actual quantity, right? Let's see for A. What is the revised standard? 808 times 4 minus standard price is 4 times actual quantity was 830. What is the variance here? 22 times 4, 88 adverse. Coming to E, we have 1212 times 3 minus standard price is 3 times 1190. So what will it be? 1212 minus 1190 times 3. We have 66 favorable. 66 favorable. So material mix variance is equal to 88 adverse plus 66 favorable, which will be equal to 22 adverse. Now here we can perform a check. What check? Check is going to be basically material usage variance is equal to material yield variance plus material mix variance. How much is my uh, uh, material yield variance? 68 adverse plus 22 adverse, which is equal to 90 adverse. And how much is my material usage variance? See, it is 90 adverse. So we have computed correctly. Now, next, we are left with one last reference with variance, sorry, which is the total material cost variance. So, material cost variance is equal to standard quantity multiplied by standard price minus actual quantity multiplied by actual price. For A, what is the standard quantity? We have already calculated. We have got the standard cost, which is 3200. So 3200 minus, what is the actual cost? 140 plus 3378.75. Let us write down 140 plus 3378.75. What will this be? 40 plus, we have 318.75 adverse. 318.75 adverse. Next, let us B. B. What is my standard cost? 3600. What is my actual cost? 120 plus 2875. So we'll write that accordingly. 3600 minus 120 plus 2875, which is equal to 3600 minus 120 minus 2875, 605. 605 favorable. What is total material cost variance here? 318.75 adverse plus 605 favorable, which is equal to, sorry, 315 plus 605, it is 286.50 favorable. Let us do a check as well. Material cost variance is equal to material usage variance plus material price variance. Material usage variance, how is much is the material usage variance? 90 adverse. And what is the material price variance? 376.25 favorable. 376.25 favorable. So in total, what do we get? 90, sorry, minus 90 plus 376.25, we get 286.25 favorable, which is equal to this. Sorry, I made a mistake. So this 3 a minus, sorry, minus 318.75 minus 605 minus 315 plus 605. Sorry, I made a mistake. This is 286.25. This has to be, consider it to be 25. Right. So this completes our computation of variances, material variances. This completes our computation of material variances for now. If you have any doubts, please write them in the comment section below. Or if you have any specific problems which you want me to solve, please send it to my email ID, which is on your screens right now. And also, please like, share, and subscribe. Share the video as much as possible with your friends and your colleagues so that they can also benefit from my teaching. Thank you.